Hello everyone, and welcome to Caleb Brown's second quarterly webinar. We're thrilled to have so many of you join us. I'm Susie Collis and I'm part of the Caleb Brown Asset Management team. As a company with clients all around the world, we've decided to host just one webinar for the quarter that caters for both of our US accredited clients and our Australian wholesale clients. What that means is that you can enjoy listening to our special guest today. It also means that when we talk about fund performance later in the webinar, there will be a specific few slides that will be relevant to you based on your geography and citizenship, and a couple that won't be relevant to you, and we'll point them out to you when we get to them. If you're not resident in either country, please just let us know via the chat function of this portal so that we can talk to you about which of the funds may be an option for you. So the webinar portal that you've linked into today does allow you to register your interest in speaking with us at any time and to ask questions throughout the webinar, which we'll monitor as we go, and we'll try to get to as many of those as we can through the session. But if we don't get to you or your specific question at the time, we promise we'll call out to you afterwards and make sure that we follow up. So before we move too far forward, there is a little bit of housekeeping that we just need to work through. So as you may know, the funds are available only to wholesale Australian investors and accredited US investors. Past performance is no indicator of future performance, so please bear that in mind as we show you some of the slides. And please note that you should refer to the appropriate formal fund document to verify any information about the funds after the session. And finally, all investments, including crypto-based investments funds, involve risk of capital loss and risk of loss of future or past earnings. Okay, so we have a fairly full agenda for today, and the next 40 minutes will include our regular quarterly rhythm of market insights for the past quarter, some performance metrics, and a market outlook, which will be delivered by our portfolio manager, Tommy Ragul. Today, we're also fortunate to have with us Leigh Travers, who's the Director of Emerging Markets at Animoca Brands, as our special guest. Okay, before I hand over to Tommy, I thought we'd just have a very quick run through of some of the basics of the fund. For some of you, it may be a repeat, but for others of you, it might be fresh information, so we'll be quick about this part. The funds were incepted in June 2023 for our Australian funds and in April of this year for our US funds. So we have 2 funds available in the US and 2 funds available in Australia. All of the funds have been designed for long-term capital growth. And we have a recommended investment timeframe of 5 years. Doesn't mean you're locked in for that timeframe, but because of the way the funds have been built and the way that the underlying assets are selected, that is our recommendation. So very quickly, the funds are designed and actively managed by a professional portfolio management team, of which Tommy's here to represent today. The portfolio is what we call a high conviction portfolio, but it does offer some diversification through up to 25 positions at any one time. The fund is built with a strong governance and risk framework, and we apply a transparent and rigorous process to it at all times. As you may know, Caleb Brown Asset Management is part of the Caleb Brown Group, which has over 7 years in the market and a very strong and rich heritage. So these funds are designed to provide you with access to a growing market. The investment strategy for all the funds is just as I've described, but our Flagship Plus fund, which is available to the US market and the Australian market, includes a derivatives overlay for hedging purposes. So if you're interested in that, please speak to us afterwards. And as I've mentioned several times, the funds are specific to accredited US investors and wholesale investors in Australia. So there you go, there's a little bit of information. I'm going to hand over to Tommy. Tommy, can you describe the investment process and philosophy, just briefly for people who are perhaps not aware of it?
Sure, Susie. So this slide offers an overview of our investment process and philosophy. As you can see, our investment process at the top there follows a methodical 4-stage process that really defines the way that we identify tokens, research them, and integrate them into the portfolios. In the bottom 2 channels there, they consist of our investment philosophy, which has 6 tenets that really underlie our investment decision-making process. To summarize this investment philosophy and its tenets, we are fundamental investors. We focus only on our best ideas, and risk management is paramount to everything that we do.
Thanks, Tommy. That was nice and brief. I think that gives everyone a good overview. Let's turn to the main aim of this morning, really, from your perspective, which is about the market, what it's done, what the fund's done, and the performance. Can you talk to us a little bit about April, May, June? It seemed patchy. How was it?
Yeah, sure. So this slide offers an overview of the second quarter. As you can see in the top left, the crypto market retreated by about 16%. What happened was geopolitical tensions came to the forefront in April, which rattled markets, and delayed rate cuts in the US also rattled investors. Bitcoin was down around 12%, and that was really underpinned by minor supply, which hit the market, which pressured the price right after the halving event. ETH was down 6% as well, but on a relative basis outperformed. What underpinned that move was that the SEC surprised the market by applying a rule change that would eventually see spot-based Ether ETFs launch on the markets. As a result of the risk-off sentiment, Bitcoin dominance and Ethereum dominance rose, but that was at the expense of the altcoin segment, which was down 30% over the quarter. The total value locked, which is a total value of capital deposited in DeFi, was roughly flat, but there were two highlights. One being the Solana ecosystem, which was able to grow TVL by 8% in SOL terms. And also the other highlight was Coinbase's Layer 2 network Base, which was able to grow its TVL by 50%. And that was really underpinned by the benefits from the Ethereum Denkan upgrade at the end of last quarter, which reduced transaction fees for rollups. It's no surprise with this sort of market that sentiment indicators track down. As you can see in the bottom left, the fear and greed index was down over the quarter from greed at the end of last quarter to a neutral stance. But still, we saw money filtering into the system. As you can see in the bottom there, stablecoin supply increased, which means that there is still enough confidence in the market for money to keep flowing in. Lastly, we also saw a 30% rise in active addresses. So this to us shows that the user base in crypto is still very much engaged.
Okay, so a little bit challenging by the sounds of it, but let's look at quarter two. So let's see where we're going with performance and where we've been with performance for the last quarter.
Sure. So this slide offers an overview of our performance for the quarter of our Australian-based funds. They are net of fees and denominated in Australian dollars. So you have a growth of $10,000 chart to your left and performance attribution on the right, which uses a CoinDesk market index, a proxy for the crypto market, to offer those stats there. So as we just discussed, it was a tough market, and our fund was down over the period, given that mostly due to the fact that altcoins did crater in June, and given that our portfolio tilts towards alts, that made us struggle during the period in question. The Flagship Fund was down 24%, and the Flagship Fund Plus was down 25%. However, since inception, the Flagship Fund is up 49%, and the Flagship Fund Plus is up 43%. So in terms of what contributed to overall performance, the biggest contributor was being overweight the Layer 1 industry group, and this very much encapsulates our bet on Ether. Given that Ether drained liquidity away from the rest of the market, we greatly benefited off this. Our biggest detractor for the period was being overweight exchanges. These tokens within this industry group were very much caught in the altcoin malaise in June. But in particular, decentralized exchanges were impacted from the tail off in trading volumes over the period. This offers a similar slide for our US-based funds. So everything quoted on this page is net of fees in US dollars. The fund, or the Caleb Brown Flagship Fund US, was down 21%, and the Plus Fund was down 20%. Given that these funds were launched in the quarter, the since inception figures are exactly the same, as is the performance attribution, because these portfolios mirror the Australian portfolios.
Okay, Tommy, a challenging time, but clearly the fund is about long-term capital growth, so we're looking forward to see what's happening. Let's have a little look at the actual makeup of the portfolio. We're starting to get some questions through about what's in the underlying portfolio. What can you tell us?
Sure. So this slide here gives investors or potential investors a bird's eye view of our portfolio. To the left, we have our sector segmentation. To the right, we have our industry group segmentation. I might note that the industry groups are carve-outs from the sectors on the left. So if we start with the sector segmentation, you see we have a concentration within the currency and smart contract platforms sectors, very much because we believe that these protocols within these sectors have the strongest moats, the most viable business models over the long term. Outside of those infrastructure-related protocols, our next biggest bet is on the decentralized finance space. We very much believe that this is a space that's highly undervalued, at least certain assets that are in our portfolio, in our opinion. And we believe that as institutional investors make their way into the space and start gravitating towards altcoins, we believe that DeFi will be on the top of their list, given that many of these protocols look and feel like traditional equities in terms of their cash flow generation, competitive advantages, and so on. In terms of the industry groups, Bitcoin and Ether really make up that transparent and layer one exposure there. But another area of focus for us is the credit platform industry group, which forms part of the DeFi space. This industry group consists of protocols which originate peer-to-peer loans. And we believe as people keep migrating from using centralized exchanges to conduct their loan activity, offering up their assets as collateral for loans, we believe that decentralized protocols stand to benefit the most from this shift. So this slide offers an industry rotation. What that means is for each industry group listed there, it shows the difference in portfolio weight from the end of last quarter to, or the end of the March quarter to the end of the June quarter. So you can see that our biggest rotation in was the layer one industry group, where we saw a 6% rotation. This came from two sources. It came from us adding to our ETH position during the quarter, and also due to ETH's relative price performance. It outperformed most other segments of the market during the period. Our largest rotation out at about 3% was the DAO industry group. We actually added to this position, to this exposure, throughout the quarter. And most of this rotation out came from market movement, given that we saw that rotation out of alts in the June period.
Thanks, Tommy. That's a great set of why information for people to understand how it's built. Sure. What should we expect for the remainder of this quarter? Obviously, July's been a bit of a shift from that second quarter. It's looking a little different. What do you think is on the horizon?
Sure. I'll start with the ETH ETFs. We're very bullish on this development. These ETFs listed overnight, and we saw around 1.1 billion in volume for the day, which is about 1,000 times what you'd see with a typical ETF launch. I think the market expectation is that we'll see somewhere in the order of 25% of the capital that went into the Bitcoin ETFs this year. But in the near term, we expect to see around 3 or 4 billion in net inflows go into these vehicles, and over the longer term, around 12 months, we believe we'll see an order of 10 billion or so go into these funds. But despite, us thinking that only around 25% of the capital that went into the Bitcoin ETFs will go into the Ether ETFs, we believe that in terms of the impact that it can have on price, it will be very much in line. We are of the view that the percentage uplift will be very much in line with what we saw with Bitcoin. And the reason for that is that the multiplier on inflows is much higher for ETH than Bitcoin. I'll explain that. So in the first quarter, we saw that around $20 billion went into Bitcoin, and that came from stablecoin conversions and the ETFs. And that led to a 460 billion uplift in the market cap of Bitcoin. So that's around a 23 times multiplier. So what that means is for every dollar that goes into Bitcoin, the price changes by $23. If I divert your attention to that slide, we factored in a multiplier of 50 for ETH, which would roughly take us to a market price of around 5,200, just above the all-time high of Ether. Why does ETH have a higher multiplier? Well, there are a few reasons. The first reason is that right now, there's less ETH to buy on exchanges. You're talking about 10% on centralized exchanges versus Bitcoin, which has around 15. Second of all, ETH has greater utility than Bitcoin. So outside of store of value properties, 40% of supply is found in smart contracts, and around 27% or so is being staked in the Beacon chain. Lastly, Ether is a third of the market cap of Bitcoin. And what that means is it's more sensitive to changes in trading volumes. We also believe that DeFi is making a comeback. We're starting to see, I guess, more interest in some of these legacy DeFi 1.0 protocols over meme coins as of late. As you can see in that chart in the middle, Maker token, Lido, and Aave collectively generated around over 400 million in revenue over the past 12 months. But the problem up until now has been that a lot of this revenue doesn't accrue directly back to token holders. We believe that there's a sea change that's occurring. Firstly, we believe that a new US administration is going to bring, if they come in, will bring clarity to the crypto space, and it will give confidence to these DAOs that oversee these protocols to enable a fee switch, which would see essentially part of the cash flow they generate go back to token holders via things like buybacks, dividends, and other things that we're familiar with in the traditional realm. We've already seen early signs of that. Uniswap are about to turn on their fee switch, and also we've seen other posts in forums that suggest that others are thinking about doing the same thing. We also have an expectation of broader market participation. We mentioned last quarter that a very small percentage of both stocks in the traditional realm and crypto assets are amounting to a large proportion of returns over the past sort of 12 to 18 months. In the traditional realm, you have the FANGs that have been lifting the market mostly. And in crypto, it's been Bitcoin, meme coins, and a few other industries. We're starting to see some of this narrow breadth broaden out. If you look at that chart on the left, you see that just recently we saw a very large rotation out of large caps and into small caps. So the Russell 2000 is a small cap index. That last data point there shows that the 5-day rotation was around 10%, which is, I guess, the largest on record. But yeah, despite this breadth starting to broaden out, we don't believe that the tide will lift all boats like it did in the past. If you look at the altcoin space in particular, it's $1 trillion market now, order of magnitude larger than last cycle. So we believe that investors still have to be very selective. Something that might supercharge this broader recovery, particularly across the altcoin space, will be that FTX distributions are being made later in the year. So it's around $16 billion worth of distributions, but we're of the opinion that around a quarter of them will go back into the market and facilitate the next leg up. I'll now pass you back on to Susie.
Thanks, Tommy. It sounds like it might be an eventful quarter.
Yes.
Hopefully a really strong one. All right, thank you so much. So as we promised you all, we have Leigh Travers from Animoca Brands with us today. Leigh, thank you so much for coming to be with us today. For those of you who may not be aware, Caleb Brown's head office is based in Melbourne, and Leigh's not based in Melbourne. So I just wanted to show you where Leigh lives, because coming to Melbourne from this place sounds like a really strange idea, but we appreciate your presence nevertheless. So this is where he lives. We're not going to tell you where that is right now, but just for fun, a poll has just popped up on your screen, everybody. So take a guess at the location in the picture, and I'll ask Leigh about it at the end of the interview, and we can I'm sure he'll tell us where he lives. So Leigh, I'm sure the audience will want to make the most of your presence. We've got so much to talk about. Web3 gaming is a really hot topic, and we've got a lot of questions to get through, but let's see how we go, and we'll see where the conversation takes us, shall we?
Beautiful. Sounds great.
Lovely. So your career in crypto has spanned several large institutions, so Binance, DigitalX, and now Animoca Brands, and you've had over 10 years experience in the industry, which I think almost makes you a veteran, so by crypto standards anyway. We've got a big audience listening in, and I'm sure some of them will be familiar with Animoca Brands, but for those of you who may not know the brand so well, can you talk a little bit about what Animoca Brands does and what makes it so successful and iconic?
Yeah, absolutely. So Animoca Brands is an Australian company that's previously listed on the Australian Stock Exchange. It's now focused very much on the investment side of the market. We're probably the most active Web3 investor, over 540 investments in our portfolio. And our focus really is on digital property rights. So using blockchain, NFTs to effectively bring back those digital property rights for consumers from Web2 brands that have been so prolific over the last couple of decades. The business is focused on really three main pillars, which is digital asset advisory. So we help other projects launch their tokens into the market. We've got support from a tokenomics perspective, marketing side of things. We've got a digital asset team that help you with market making and other support. As I mentioned, we're an investor, so invest directly into projects, both within Web3 as well as strategic. So that means within infrastructure and gaming. So we're really focused on the intersection of gaming and infrastructure. But the investment mandate allows us to go outside of that within Web3. And then we also incubate businesses in Web3. So Web3 operating businesses across education, across culture, entertainment, gaming, and infrastructure. So very active throughout Web3. I was originally attracted to the business back in 2018 when I met Yat as part of being another ASX listed company, and could see sort of his vision for digital property rights, and focus was much more than just what the prices were in Web3. It was about that sort of vision and about bringing that together. So I think one thing that really impressed me about Animoca during 2023 is they sort of stepped up when there was that leadership vacuum.
Yes.
We had a lot of issues in 2022 in the markets, and 2023 saw Animoca and a few others really step up and sort of start to talk about how this space is bigger than just prices. It's about solving problems for consumers in a world where privacy, deplatforming, Web2 brands have really impacted things, and bringing sort of financial inclusion and digital property rights to the forefront, and starting to see that sort of take effect now by investing in the bear market, and things are looking a lot better now.
Amazing. So very broad remit for the company by the sound of it. It almost sounds like a consulting-based style of working.
Yeah, there is a lot. I'd say 70% of the revenue is probably generated from that digital asset advisory side. We've had a lot of experience launching tokens. We've got a strong network of investors, exchanges. We know how tokenomics works for some of the more complex projects, being games. So we like to leverage that expertise and help other businesses as well.
Wonderful. That's great. Thank you. That's a really great outline of what it's all about. So we've seen some pretty interesting trends this year. Bitcoin price reached an all-time high prior to halving. We've had ETFs in the market, and you've been around quite a while. You must have seen a lot. What's been the most surprising thing for you over the last 6 months in the crypto industry?
Well, I think there's been a few shocks that have come through, and I'd have to say probably the ETH ETF.
Oh, really? Well, there you go. Yesterday.
At the time that it was, announced, I think the market was predicting about a 10% chance. And as we know, crypto markets generally more bullish than they are conservative. So, to see that sort of come through, really sort of shows that institutions are interested in this product, as well as that the political climate towards crypto is softening. It's been very aggressive prior to that, because of those issues that we saw in 2022 with some of those main characters.
Yes, indeed.
So to see that come through, I think for me, put me in a very sort of bullish view over this market. And then thankfully, I'm not a short-term trader because we saw a lot of supply shocks hit the market. Yeah. So we saw the German government in what was probably...
It's been fun over the last few weeks, hasn't it?
Yeah, the worst trade execution since, I think, the 2015 bear whale, when someone put up tens of thousands of Bitcoin on the exchange at 10% under market and just left it there. I'd sort of liken the execution to the quality that we saw there. And then Mt. Gox. Yep. So my old firm, Digital X, is certainly owed as a creditor some Bitcoin, and that's been going on for 10 years.
Oh, gosh.
So it's almost that Lindy effect where the longer something persists, you expect it to maintain, and sure enough, they've also announced that distributions are happening now. So it's a case that was sort of another supply shock, and we saw sort of prices impacted during this period in a very, very volatile and wild way. But in terms of sort of that overall thesis for institutions adopting crypto, for the interest rate cycles sort of stopping in terms of increase and certainly looking more positive for decreasing, as well as the warming political climate, that's still intact. But you've just seen some very strong exogenous demand and supply factors impact the market this sort of last 6 months or so.
It's been quite extreme, hasn't it? And I will ask you later about what you think is going to happen going forward. But let's stick to the gaming piece for now. Thank you. That was a great response. What are the current trends in the crypto gaming space, if you had to describe them?
Yeah, in terms of crypto gaming, obviously all familiar with gaming, video games. I guess it's the heaviest use of probably the internet in terms of what most consumers, particularly at an early stage, are coming to the internet for is gaming. Some interesting markets out there in terms of sort of the adoption of esports and games in the Middle East and Asia is just the amount of screen time spent on games is very, very strong. And where crypto gaming comes in is essentially those digital property rights. So giving you as a creator and a consumer value in the games that you create, as well as the ability, the assets that you build up in games, you can take them with you into other games and sell them as well. So you're actually accruing the value that you're generating, which wasn't really possible before. So that's where we sort of see crypto gaming, and Animoca's original business before Web3 was actually in mobile gaming as well. So a strong understanding within the team, and it's sort of great to get that osmosis of learning through sort of the Hong Kong team and the wider presence. But from crypto gaming, I think we've seen a few cycles where you've had AAA games coming and massive investments into the game studios. But where the interest at the moment is probably that mass adoption. So more casual gaming, mobile gaming. And that was more difficult before, up until we've seen the Telegram and Ton ecosystem start to proliferate. And that's made crypto gaming a lot easier. We've seen tens of millions of users join some of these games in a very short space of time. That's gamey, that's pixelverse. There's been a step change in the speed of adoption of these games. I would say they're more on the casual side, and we're seeing effectively people compete to win points, to compete against each other, and they're being onboarded into Web3, and that's something I think investors are keen to see. We're keen to see more adoption of applications and games, which uses more bandwidth over infrastructure. Exchanges want to support that because there's more users in the marketplace, and then ultimately everyone wants sort of more users in Web3. It sort of brings more value and more opportunity to this space. So you're seeing quite a lot of cross investments. So layer ones will be investing, exchanges are investing, retail is getting some interest in this. So I think it's a space that can warm up very, very quickly, and we've started to see some green shoots on that already, after what was a very soft period for crypto gaming, maybe that 22 to 23 period, with the failure of some of that sort of GuildFi ecosystem, where you had NFTs that really declined in value, and sort of the interest in those games subsequently declining too. So market's picked up in crypto gaming, and it's a pretty interesting space to be in.
Sounds like it. Is the demographic changing? Sorry, I know I haven't asked you that question in advance, but is the demographic changing of who's involved in gaming?
Yeah, absolutely. Well, we're seeing Asia come through very, very aggressively in terms of their user base, and that's sort of across Philippines, Vietnam. I was just in Vietnam for GM Vietnam conference, and the amount of interest in that sector in terms of gaming for that user base is just extraordinary. It's off the charts. The amount of time they're spending. I actually got to meet the number one Axie Infinity player in the world, and just to sort of hear the life that he's been able to create for himself within crypto gaming is pretty extraordinary, and there's a lot of others that are looking to follow suit. But I'd say it's still tending towards the younger generations. And the other element with Animoca is they're actually building up a presence in the Middle East. And gaming's huge over there. It's one of the highest regions for revenue per user, and they'll even have an esports minister, for example.
Really?
Like that's the level of interest at a government level, and that kind of filters down to what the population's interested in. So very, very different markets that we see. Like obviously we're mainly focused on Australia and the US, which are almost in lockstep. But wildly different interests across other parts of the world, and that's where we're starting to see huge amounts of growth. So I'd encourage you to have a look, on a more global scale within the crypto marketplace.
Absolutely. Wow, that's a very broad base to work with. Just everywhere. Great. What about, and you've touched on this, but the main barriers to mass adoption in crypto gaming, is that something that's still prevalent?
It definitely is. So, we probably look at things, with an overly cautious perspective, because we have so many investments in gaming. We can see what's worked and what hasn't. So I sort of talked about a little bit of the breakthroughs, but generally with crypto gaming, you've still got some of the core issues. So the infrastructure that's being built on isn't always scalable. So you get a huge increase in users. That can actually lead to some bottlenecks with using the game, or it can lead to a bottleneck with the spike in fees.
Okay.
So that makes the gaming experience nowhere near as enjoyable. And the other one is on the wallet side of things.
Okay.
So where the TON ecosystem has made the creation of a wallet as easy as we've seen it. It's easier than any of the other sort of self-custody wallets we've seen, onboarding with an exchange, getting your hardware device set up, having those sort of risks. You can set up a wallet in literally a minute in the application. That sort of wallet user experience has still been a big problem. Like gamers don't want to manage their own private keys. So that's sort of been a key issue. And then the other one is when you've got sort of tokenomic systems where you have the value of assets within games, or maybe there's a currency in the game. There needs to be some sort of stability around that. So you need liquidity. And when you have different blockchains that are siloed, to manage that liquidity is quite difficult for games as well. Right. So we're starting to see with infrastructure being built, layer 2s, etc. It's a little easier, but there's still those problems with siloed liquidity, user experience, scalability, fees, and then the quality of the games hasn't quite met the expectations of some of the core gamers that are using PCs, consoles. We're still probably at that sort of hyper casual gaming element. I'd argue there's a few games out there. Maybe it's Shrapnel. Maybe there's a few others that are starting to get some interest from core gamers and saying, hey, this is actually a really good experience. But the quality of games does need to improve as well in Web3.
Yeah, absolutely. So if I think about Web2 gaming as sort of those cult games, is it the same sort of play in Web3? Everyone's looking for that. As you say, you talk about casual interest in it, but is that the ultimate goal, is to get that cult following for some of those games? Yeah,
absolutely. Like you want your core supporters, becoming a community, bringing in other gamers that you can compete with your friends, and that's the experience you want to have. Enjoyment, big communities, lots of people, and high quality gaming.
Yeah, so that becomes the community building piece, doesn't it? It's exactly, important. Okay, fantastic. And I did notice that Animoca Brands has just launched the Mocaverse. Can you tell us a little bit about that and why it's important?
The Mocaverse is a really interesting project. It's several years in the making for Animoca, and it combines some really interesting elements around culture, entertainment, digital ID that I think a lot of projects have been trying to do for many years. But where Animoca has some strategic benefits is there's 500 or so portfolio projects within the ecosystem. There's new technologies out now that make digital ID more possible. And there's also an access there to hundreds of millions of users through that network of gamers and infrastructure users and portfolio projects that can really tie up a loyalty and ID ecosystem into one. So the Mocaverse just launched its token this month.
Okay.
It completed a capital raising just prior to launch at around $1 billion, with some very high profile investors coming in, and just announced this week that the TON Telegram ecosystem was doing a $20 million token swap. So sort of cross-pollinating both ecosystems. So the Mochaverse combines the Mocha ID, which is the core piece, which is your decentralized ID for online. It allows you to have that individual personal privacy, so you're not sharing your address and date of birth and maybe things like, you know, race and gender. But you can build up that identity and reputation online. So when you're playing games, when you're interacting with communities, that goodwill that you're building up, that can be used to then access other applications, projects, or even get things like whitelists to invest into new communities and new projects, or airdrops. So you actually create value online with this reputation, and you're getting value back, which wasn't really possible in Web 2. And Web 3 is allowing this. So we really think that the Mocha ID can work with a range of other ID systems. It could be complementary. But we think around sort of infrastructure and gaming, you want to be connecting your Mocha ID when you're interacting with these projects and applications, because you're going to get a lot of value back. You're going to build up your own reputation, and that's going to be, I think, a really interesting space to watch. That sort of loyalty you have for games, for being a token holder, is something we've seen, and NFTs really help you allow that. There's almost 9,000 NFTs within the Mochaverse community, and have traded sort of between 1.5 and 4 Ether. So it's a very high value ecosystem with close to 2 million different Mocha IDs out there at the moment. So yeah, one of the fastest growing projects, and something that I think Animoca is very, very keen to support.
Yeah, that sounds amazing. And 2 million in a month is very impressive. So congratulations.
So 2 million, but the project's been built over probably the last year in terms of the Mocha IDs, but it's just launched its token on exchanges in the last month.
We'll look forward to watching that with great interest. Next time we'll come see how that's going. I'm sure it'll be wildly successful. Let's switch up a little bit. And I know this is going to sound like a boring topic, but it's actually not. I wanted to ask you about risk management, because we've had a very interesting market, as you've described, and I wanted to know what you believe risk management has in terms of a role to play in institutionalizing crypto, and do you see investors placing a greater importance on risk management and good governance, given what's happened over some of those things that you've described over the last few years?
Yeah, I think that sort of governance around investing is probably brought to the forefront with ETFs. There's many funds out there in the market that maybe have that vanilla structure of just offering access to Bitcoin or Ether, and only the ones that have the highest standard of governance are sort of getting that ETF approval. And I was part of a fund previously that secured investment grade rating, and has now gone through that launch for the ETF, which is Bitcoin on the ASX, and sort of been able to see that sort of uplift that's been required over the period. We've also seen some very high volatility over the last 2 years, many standards of deviation away from where the average volatility has, and that's ultimately blown up some of the most aggressive and probably best performing funds, as well as the lowest performing funds. So what you've got left is those that have been practicing risk management, that have been in the market for a longer period of time, or have got that governance process because they've had that TradFi experience. They've got other funds in traditional finance, and they sort of understand the importance of that. And investors have got a lot greater opportunity of the number of funds in the marketplace. So they're able to select ones that are set up correctly, that are doing all the right things, and are using that risk management, and probably want to hear from their portfolio managers, like we're hearing today, like how that's actually applied to the investments that they're making.
Yeah, absolutely. One of those things that sits in the background and you don't even know about until there's a problem, and it's either a good protocol or it's not. So
exactly.
Yeah, fantastic. All right, look, we've just about run out of time, Leigh, but I did want to ask you about your view of what the next 6 months is going to look like, given all your experience. If you had to gaze into your crystal ball, what do you think it might be?
Well, I think some of the key themes that we've seen. So the institutionalization of the market, because ETFs are coming in. We've got Bitcoin, we've got Ether. The market's thinking, what's next? What other assets are coming into the institutional focus? And that is allowing more investors to come in. So more buying power, more demand is coming at that end of the marketplace. From a political climate, we've touched on that. It's drastically different to what it was 6 months ago.
Yeah.
Both US parties are actually softening in their stance, and I think one's even looking quite bullish.
Indeed.
So that's, I think, going to help a lot, particularly, I'd say, the blue chip DeFi protocols, where they can actually see an opportunity to provide some of that value, the revenues they're generating towards the token holders and benefit that. And I think that's going to be very good for the marketplace too, to start to see revenues accruing to token holders and investors becoming more selective about the investments they want to make. And the other one is just the interest rate cycles. That's I think not going up any further, particularly in the US, looking to come down, and it's already started to come down in some markets. So investors are going to start looking for higher returns, and I think over time crypto's certainly proven to be a higher return asset class and something that gains a lot of interest when interest rates start to come down. And then ultimately there's more users coming into this marketplace. So we're going to have more users, more demand, more interest in projects, and I think that spells a pretty good outlook.
Spells a great outlook.
Just wondering what the black swans are going to be contending with over the next 6 months. So yeah, at a high level, that's what I'm seeing. And I think I touched on a little bit of a sector level with sort of DeFi. And then, probably the project side of things, the Mochaverse is probably the one that we're most interested in at Animoca, and sort of one we'll be aggressively pushing over the next 6 months and beyond.
Yeah, fantastic. Leigh, thank you so much. That's wonderful. Now, I think we have had quite a few people complete our poll. Oh, look at that. So I've just got some numbers. So 81% of you guessed correctly. So they know where it is, Leigh. But do you want to tell everyone just out loud where that picture's from?
That's a beautiful picture of the lighthouse at Byron Bay.
So lucky man. That's great. And so 81% guessed correctly, and another 14% want to go there. So there you go. You might have some people on your doorstep if you're not careful, but it's a beautiful place.
There's a few crypto leads there in terms of running big projects and investors and stuff. So maybe you can call it a business trip.
Sure, absolutely. It will definitely be a business. We might even host the next webinar from there if we're very lucky. We'll do our best. Thank you so much for your time today, and thank you for joining us. Really appreciate it. All right, everybody. So we really thank you for spending some time with us today. We value your continued support and your interest in our funds and these webinars. If you'd like some more information, please let us know. If you'd like a copy of the latest monthly fund update, just reach out. We'd be happy to talk to you about it and provide you with one of those. And we're also open to any topics that you might like to hear about in future webinars. So feel free to hop on that chat line for the webinar portal, and we'd be delighted to hear from you. Thank you again for your support wherever you are in the world. Have a wonderful remainder of the day, and we'll look forward to having you with us again next time. Thank you.